The stock is currently trading live at $2.11, down roughly 4.5% in the opening hour of this Wednesday, November 26, 2025 session. While the pre-market data you might be seeing on your screen showed a static hold at $2.21, the opening bell has unleashed immediate selling pressure, pushing the price down by over 10 cents as the market digests a massive influx of complex news. This volatility is not random. It is the direct result of a collision between retail hope and institutional skepticism following a flurry of announcements that fundamentally alter the structure of this company. Most investors looking at Datavault AI, ticker DVLT, expect to see a standard artificial intelligence play, a small-cap tech firm perhaps licensing software or running data centers. That is the assumption. The reality is far more strange and significantly more aggressive. What you are actually looking at today is no longer just a data company. As of this morning, Datavault has effectively morphed into a hybrid vehicle, combining data tokenization, a Bitcoin treasury strategy, and a biotech derivative play. The market is selling off right now because the complexity of the deal announced today, the second tranche of Bitcoin investment from Silex Holding, is forcing a repricing of the risk. We are not just looking at revenue misses or earnings beats, we are looking at a fundamental shift in what the company owns. Today's headlines confirm that Datavault AI has closed the second tranche of its financing deal with Silex Holding Company. In this transaction, Datavault received approximately 1,237 Bitcoin. Yes, you heard that correctly. This AI company is now holding a massive amount of cryptocurrency on its balance sheet, received in exchange for a pre-funded warrant that allows Silex to purchase over 260 million shares of Datavault common stock. This explains the downward pressure we are seeing on the chart right now. While the Bitcoin inflow strengthens the balance sheet, the sheer size of the warrant coverage implies a potential massive dilution event hanging over existing shareholders. The market is trying to calculate whether the value of that Bitcoin appreciates fast enough to offset the expansion of the share count. This is the tension driving the volume today. But to understand why this stock is at $2.11 and not 50 cents or $5, we have to look at the broader strategy, which most retail traders are missing. The expectation is that DVLT is an AI software vendor. The reality is that they are building what they call Sumerian crypto anchors, a technology intended to digitize real-world assets. Just 2 days ago on Monday, Datavault announced a $7 million minting deal with MTB Mining in Tanzania. They are not just managing data, they are tokenizing actual copper, gold, and rubies, specifically the Windsor ruby. They are attempting to create a digital ledger for physical commodities, allowing them to be traded on a new exchange. This is a massive swing. If it works, they become the infrastructure for a new asset class. If it fails, they are a company with a lot of Bitcoin and a lot of dilution. This brings us to the most controversial aspect of the current movement: the short squeeze potential and the meme coin dividend. We have observed a very high short interest building in DVLT, currently estimated around 17% of the float. This is high for a company of this profile. The shorts are betting that the dilution from the Silex warrants will crush the stock price. They are betting that the company is simply printing shares to stay alive. However, Datavault management has played a card that almost no one anticipated. They announced the distribution of a Dream Bowl 2026 meme coin to their shareholders. This is a tactic that requires careful attention. By issuing a digital token as a dividend or a gift to shareholders of record, the company creates a technical nightmare for short sellers. If you are short a stock, you are generally responsible for paying any dividend distributed by that stock to the lender of the shares. When that dividend is cash, it is simple. When that dividend is a digital token that may not yet have a liquid market or is difficult to acquire, covering that obligation becomes a serious problem. This meme coin strategy is not just a marketing gimmick for a football game. It is a structural defense mechanism designed to force shorts to cover their positions or face delivery obligations they cannot meet. This is likely why we saw the stock spike earlier in the week before today's pullback. I want you to pause for a second and look at the volume on the chart. It is surging well above average. This indicates that a battle is taking place between the dilution fears from the Silex warrants and the squeeze mechanics of the token dividend. Comment below right now. Do you think the meme coin dividend is a brilliant move to trap shorts, or is it a sign that the company is distracting investors from its financials? I want to read your theories on this unconventional strategy. Now, let us ground this analysis in the company's origins, because many of you might be new to the ticker DVLT. This was not always Datavault AI. Until February of this year, 2025, this company was known as YSAW Technologies, a firm focused on wireless audio transmission. The rebrand to Datavault AI was a complete pivot. They moved away from consumer electronics hardware into the abstract and highly buzzed world of Web3 data monetization. Critics will point out that pivots like this are often red flags, attempts to jump on the latest trend, in this case AI and tokenization, to revitalize a stagnant stock. That is the skeptical view, and it has merit given the company's history of losses. However, the counter-argument, and the one supporting the current $2 valuation, is that the assets they are acquiring are real. The Bitcoin is real. The license agreement with Wellgistics Health, announced yesterday, grants Datavault an exclusive license for smart contract patents in the healthcare space. This targets a $600 billion prescription drug market. If Datavault's technology can actually track pharmaceuticals on a blockchain to prevent fraud and improve efficiency, the revenue potential far exceeds their legacy audio business. They are essentially trying to become the notary public of the digital age, verifying everything from Tanzanian copper mines to U.S. pharmaceuticals, all backed by a balance sheet that now moves in correlation with Bitcoin. Let's analyze the short-selling pressure in more detail. You need to be aware that when a company issues massive warrants, like Datavault has done with Silex, often attracts arbitrage traders. These funds might buy the warrants or the rights to them and short the common stock to lock in the spread. This creates a natural ceiling on the stock price because every time the stock rallies, these arbitrageurs add to their short positions. You can check the short interest data on sites like NASDAQ or specialized financial terminals. Look for fail to deliver data in the coming weeks. If the meme coin dividend causes a settlement failure, you will see a spike in FTDs or failed to delivers. That is your signal that the plumbing of the market is clogged and a forced buy-in could occur. But be warned, chasing a squeeze against the company with hundreds of millions of potential new shares coming to market is incredibly risky. The supply of shares is elastic. It can expand. The Silex deal also ties DVLT's fate to the biotech sector. Silex is a player in non-opioid pain management. By taking a massive stake in Datavault, they're effectively parking capital in this data crypto vehicle. It's a strange symbiosis. Datavault gets liquidity in the form of Bitcoin. Silex gets a tech arm that might help them manage patient data or supply chains. But for you, the shareholder, you are now exposed to the volatility of three different sectors: AI tech, crypto, Bitcoin, and biotech. When Bitcoin drops, DVLT's balance sheet shrinks. When the biotech sector corrects, Silex stock might suffer, potentially impacting their strategic hold on DVLT. Let's talk about the technical levels to watch for the rest of this week. The stock is currently hovering near the $2.10 mark. The 52-week low is down at 25 cents, while the high is over $4. We're trading right in the middle of this range. The key support level to watch is $2 flat. This is a psychological barrier. If the market pushes DVLT below $2, the dilution narrative is winning. If it holds above $2.20, the squeeze narrative is in control. The volume-weighted average price for today is trending around $2.13, so we are trading slightly below the average price paid by intraday traders. This suggests bears are currently in control of the session. Now, what about the business fundamentals? We must not ignore the income statement. The company has historically burned cash. The pivot to AI and data monetization is capital-intensive. While the Bitcoin injection provides a stronger asset base, Bitcoin does not pay the electric bill unless you sell it. The company needs to generate operating cash flow from these new deals, the mining royalties and the pharmacy tracking. The $7 million deal with MTB Mining includes a 30% perpetual royalty. That sounds fantastic, but royalties only come if the mines produce and the commodities are sold. It's contingent revenue, not guaranteed cash flow. Investors should scrutinize the next quarterly report to see if any actual cash has hit the bank account from these high-flying press releases. There's also a regulatory angle here. The U.S. government is increasingly scrutinizing real-world asset tokenization. If Datavault is creating digital tokens that represent ownership in copper or rubies, are these securities? If the SEC decides that Sumerian anchors are unregistered securities, the company could face significant legal headwinds. This is a risk factor that is rarely discussed on the message boards, but is critical for any long-term holder. The Dream Bowl token also walks a fine line. Is it a utility token or a dividend? The regulatory classification of these assets could determine the company's survival. Looking forward to the rest of 2025 and into 2026, the calendar catalyst is packed. We have the integration of the Wellgistics Pharmacy platform, we have the operational start of the MTB mining tokenization, and we have the Dream Bowl event in early 2026. Any one of these could spark a rally, but the overhang of the Silex warrants will remain a dampener.